Hey guys, I just wanted to make a video about today's interest rate hike. So essentially, if we're looking at this, interest rates, they went up by 75 basis points. So right now we're sitting at 3% to 3.25% for the Fed funds rate. Now, let's go ahead and let's take a look at the projection materials. So I'm going to prop that up right here. Now, take a look at this. So here for 2022, they changed this. So now we are looking at 4.4% by the end of 2022. So in June, so in the June projection, they were talking about 3.4%. So, right now the higher end of the spectrum is 3.25%. So we're literally expecting something along the lines of likely a 75 basis point hike along with another zero point 0.5 basis point hike if we do want to hit this Fed funds rate of about 4.4%. So that's pretty scary, you guys. I mean, the interest rates, they are not going to stop. They're just going to continue. Now, if we look right here in 2023, they're probably planning to take it just a little bit higher. I mean, look right here. It's 4.4 to 4.6. In the June projection, they were talking about 3.8. But here's the interesting thing, you guys. So here for 2024, they're still planning to do that pivot in 2024. So for the June projection, they were talking about 3.4%. So now they're talking about 3.9% in 2024. So that is very interesting. The 2025 projection, they want 2.9%. So, they are planning to drastically cut those rates when they do see that inflation number come down. Now, let's take a look at unemployment as well. So here for 2023, they want the unemployment rate to be 4.4%. So let's just go ahead, take a look at where we are right now. So if we're looking at where unemployment is, our last reading was 3.7%. That was for August in September. So let's just take a look at how the market is reacting to all of this data. So first of all, SPY, it's doing something crazy. It fell off a cliff as soon as this news came out. Rightfully so. I mean, we were expecting like rate hikes to probably just go a little bit higher. Last time they told us 3.8 by the end of this year. So they were expecting maybe just like another zero point 0.5 or something of that nature. But now, we're looking at a 0.5 and possibly a 0.75 by the end of this year. So, this really makes sense, this move right here. This move, this dead cat bounce right here is what I think it is. I don't really care where the stock market is going to go in the shorter term, but where I do know it is going to go within the next few quarters is likely it's going to go down. But, that doesn't mean that the Fed has to pivot in 2024. If economic conditions do get better in terms of inflation, they could pivot sooner. And if the unemployment rate does spike above what they're projecting, they would have to step in and stimulate the economy. So we don't really know, when they're going to pivot. They do plan on pivoting in 2024, but that could happen sooner or it could happen later, depending on what happens. But given that we just had back to back to back 75 basis point rate hikes, we had three of them just now. I do feel like the economy, it's going to feel this impact. There's this impact lag that is going on, and we're just not seeing this right now. And, we may see it in the months coming. Let's just go ahead, look at the dollar. If we're looking at the dot, oh my gosh, this thing just absolutely mooned. So this is going to cause further headwinds for these multinational companies. Remember, they have to convert all of that money back to United States dollars. So they're going to take a loss on the books. And also, this does hurt exports. So, overall, the dollar is still very strong. This is going to hurt multinationals. We are going to see continued headwinds in earnings. So definitely watch out for that in this next round of earnings. So I hope you guys enjoyed this video and have a good one.